Hey everybody, welcome back to Grain Markets and Other Stuff. We have a guest today. I have my friend Ken Morrison with us, and we've decided that I decided that we would do an episode just specifically about China and the trade deal, the recent flurry of purchases, and all that good stuff. Ken, you and I have talked about this at length in the past.
We have, and thanks for inviting me on the inaugural guest of your webcast.
You are the very first guest ever on Grain Markets and Other Stuff. Now, I've had Ken when I guest host on AgriTalk. I've had Ken on a number of occasions, but we haven't really talked a whole lot since this flurry of buying started from China in regard to soybeans and corn and some other products. And I thought it would be a good idea just to kind of bring Ken on, talk about what's going on here with China, talk about just the situation in general. So without further ado, we're going to get started here. And for those of you listening, I'm going to have some charts and some graphs and some things up on the screen, but you should be able to listen to it just fine. I want to take us back to the beginning, Ken. We signed this trade deal with China on January 15th, I believe was the date. And it was the trade deal to end all trade deals, right?
We hope so.
At the time, we hope so. And when we talked shortly after that, I think we were both kind of maybe pessimistic about it. Is that what you would say?
Well, I think my primary concern slash objection to it is that it was written as a dollar-based deal, and that kind of implied that both sides knew what prices would do. And it kind of brings us to the point that I wanted to make, and that is, on a dollar-based deal, there's still no chance China is going to meet their obligation. But had it been done on a volume-based deal, as any other trade deal in the history of man has ever been done, both sides could claim victory. I mean, clearly China is at record purchases on a volume basis, but not on a price level relative to the obligation.
So now you saw this announcement from the U.S. Trade Rep's office and from USDA here the other day. And essentially what they're claiming here is that China's bought $23 billion in ag goods this year, 71% of the target. Is there any way to really calculate that? I mean, I know they're throwing a number out there, but is that a real number?
Well, it's certainly not the spirit and the intent of how the agreement was written. It was, it's going to be measured on actual shipments and actual dollar values as deemed by either a combination of China and the U.S. Census dollar figures. So I kind of viewed it as kind of a pre-election, pump up the, word about the trade deal sort of a thing, and left it at that. Again, I think let's just see how things go. But at the bottom line is they're basically conceding that we're only 71% there. However, even they measured it. So
my question, I guess, is that does the trade deal, as we understand it, does it really matter at the end of the day if the U.S. is happy with it? I mean, if the U.S. is happy with the progress and China's happy with the progress, do the numbers, when you get down and really analyze them, do they matter a whole lot?
No, I don't think it matters a lot. I think what has mattered is, China clearly, fundamentally, we can assume fundamentally, the numbers say that China needed to buy what they have purchased from the U.S., and we can leave it at that. They've made a great effort and set records on a volume basis. So I don't think regardless of who the administration is, come January forward, I don't think there's going to be any dust up about the trade deal at all relative to the progress made so far.
Now, we've made some great progress, and that was the next couple charts I'm going to bring up here are just charts of sales of corn and soybeans versus the last few years. But what I wanted to mention first was that, they signed this trade deal in January, but it wasn't until August really that we started to see a real flurry of purchases. Is that fair to say?
Yeah, I looked, and I didn't look at China specifically, but I looked at overall sales of corn and soybeans, and about 66% of all the current sales on the books were actually done by the end of August. So, yeah, I think if we go back, the flurry kind of began maybe in July, kind of ramped up in August and of course in September, but we're starting to see a slowing in terms of, daily sales, and the volumes are getting smaller. China is showing up less frequently in those sales numbers.
The chart that I have up on the screen right now is seasonal export sales of soybeans to China, and this top orange line here is this year. So we're above any previous record, according to this chart, by a fairly wide margin. It's really been pretty impressive. The next one that I'll bring up is corn, which is even more impressive. It's again this top orange line here, which just blows the lid off of anything that China has done in the past, or at least since I think the year 2000 is how far this goes back. Are you impressed or surprised by these sales, I guess?
The bean number isn't surprising me, Joe. Clearly Brazil has been depleted of stocks. In fact, I'm shocked that there's any shipments still ongoing of soybeans out of Brazil. I mean, if you look at the prices that they're paying on a daily basis, there's no way, economically speaking, that those sales should even be shipped. They should have been arbitraged. So that aspect of it, the fact that Brazil supplies, for all intents and purposes, have been exhausted really since the 1st of September, it doesn't surprise me at all. I mean, if you look at China's monthly crush, they need about 8 million tons of beans each month. And so, I look at their purchases today at about 25 million tons on the books that we know is China, and there's probably some in there that's made to unknown, that's not yet declared to China. But we're certainly moving along to fill that gap in between September 1 and the end of January, when the Brazilian soybean harvest really gets going. So the bean number hasn't surprised me at all. Corn numbers, look, I mean, there's a lot of reasons why fundamentally they have been aggressive buyers of not only U.S. corn, but global corn. I mean, I've seen estimates out there, and I think they're probably reasonably close, that China has purchased about 18 million tons of corn from all origins so far, and about 10.5 million tons of that is from the U.S. So, you look at you take their balance sheets with a grain of salt, but I mean, you look at the weather issues that they had this summer, you look at their usage numbers, you look at their production numbers. Yeah, 15 million tons of corn imports. Yeah, that shouldn't surprise anybody. I've seen numbers like 30 million tons out here. I'm going to kind of, show me I'm from Missouri if that happens. But yeah, the corn numbers are impressive, but certainly justified, I would say.
Okay, so the chart that I have up on my screen here, I've got a few different Chinese corn charts. This is where USDA estimates Chinese corn imports. It's right at the quota level, which is like 7 million metric tons. I mean, you've got to make the argument, just about everybody does, that this number is going up, right?
Oh, no question. Well, whether it's through a formal special allocation of the tariff rate quota, or whether it's through some other side agreements with state-owned trading companies, they will import more corn than 7 million tons in each of this and next calendar years. I mean, they're already at like 6 point some million tons calendar year to date. So there's no question corn imports will rise above the 7.2 million maximum obligation TRQ that China has.
I want to bring up a couple other China corn charts here before we talk specifically about the quotas and just see what you think about them. This one is China corn production versus consumption, and we can see here that consumption's been outpacing production, and that's been one of kind of the that's been one of the big battle cries from the bulls here, is that China's using more than they produce. But when you look at like the stocks to use ratio in corn, or corn, I don't know if I have the ending stocks chart, but the stocks to use ratio in corn for China, according to USDA, is still pretty darn healthy. I mean, is this chart anywhere near reality that their stocks to use ratio is still going to be 60 something percent?
Nobody knows what reality is in China. I think, when it comes to making a judgment about their balance sheet, the best thing is simply stick your finger in the air and see which way the domestic markets are trending. And the corn market in China has clearly been telling us that the corn supply is tight. So again, when it comes to China and balance sheets, USDA is going to use what the party line in China says it is, and we just have to kind of recognize that it's just kind of it's misleading if you want to hang your hat on that.
Now, my knowledge of China, of course, is pretty limited, and that's why we have you here. USDA has offices in China, correct?
Absolutely, yeah.
And
they have an ag attaché certainly in Beijing and in Shanghai. They also have, I think, 2 or 3 other consulate offices where they have staff. I don't think they necessarily have agricultural staff in offices other than Shanghai and Beijing. But I read the ag attachés reports from Beijing actually quite regularly, and I find them most often useful. So, yeah, absolutely. They have an ear to the ground, and but at the same time, just as they've done with handling the import estimate for China, they will not veer from the party line. I mean, especially on this TRQ issue, I look at it from USDA's point of view, and there's simply nothing to be gained by front-running China and predicting corn imports in excess of what China's policy is. So I can appreciate the frustration of everybody looking at that number, but again, I'm not surprised at all. And I've had conversations with Michael Jewison, who heads up the WAOB committee of WASD, and there's just no way that they're going to veer from China's stated policy.
So when it comes to these USDA charts that I've got on my screen from China, this stuff is all very much secondary to you. You're a lot more interested in what they're actually buying, what the China corn market's telling you domestically. That stuff to you is much, much more important than anything that USDA has to say about it.
Absolutely, Joe. And of course, that I want to talk about the China corn wheat price relationship. And I think that is also telling us something about the relative value of wheat relative to corn.
Okay, so let's see. Do you want me to pull up this chart, this China auction results of wheat, or do you want me to pull up a different one?
Start with the wheat corn spread chart. Yes, right there.
That would be this one. Okay.
That would be that one. This is a 5-year chart for those that are listening and don't have the video. I have a 5-year chart of the China wheat futures relative to corn futures chart up on the board. And it essentially has gone to even money from a huge premium about 3 years ago, meaning that the corn price has rallied essentially that magnitude over the course of really 3 years. And again, this is something that I first picked up from reading the Ag Attaché report from Beijing, which I think was dated October 1st, but probably was written in the middle of September, that actually talked about, because of the narrow wheat corn spread in China, he even stated that the information they were receiving said that feed mills were replacing up to 30% of their corn with wheat in some of the feed rations, and it primarily would be swine feed rations. So I think this wheat corn price relationship and what the wheat prices and what feed mills are responding to in terms of the high corn prices, in terms of replacing corn with wheat in the rations. I don't know how big a factor it's going to be, but I do summarize it by saying it, in my opinion, is a reason to temper some of these large corn import numbers that have been flying around out here. The Ag Attaché report refers to about 20 million tons of wheat that is fed annually in China. And that's, I think, if I recall the number, 20 million tons of wheat fed is out of a total use of wheat for all purposes of about 160 million tons. They produce about 165 to 168 million tons a year. I have to believe, and again, you look at his balance sheet, and over the years, it's been a steady 20 million tons of wheat. Well, you look at this spread chart of corn and wheat, and you say, well, okay, wait a minute here. You just told us in one paragraph that up to 30% of the corn was being replaced in some rations. Why would you not increase the amount of wheat you expect to be fed in China this year? So bottom line is, I don't know what impact it will be in terms of replacing corn in the feed rations, but I have to believe, to go from 20 million tons of wheat fed to 30 million tons, it's not a big stretch in China.
Well, you got to think, I mean, just to put it real simply, if we had wheat and corn at par in terms of prices here in the U.S., I mean, there would be an enormous amount of chatter and talk about feeding wheat, and it would happen. So in China, right, we're assuming the same thing is very possible.
It's not only possible, it has been happening. We just won't know, and we'll never know really to what degree that it makes a difference. But I think it's just one of those things. It's China. You have to be somewhat logical and say it will make a difference. And so I guess the point that I would leave with people is, if you've been adhering to the notion that's been flying around out here that China will import 25 to 30 million tons of corn, if that was your mantra 30 to 45 days ago, things have changed. And so maybe you ought to veer away from that mantra and just consider what's going on in the wheat corn spread in China. Now, flip up the other chart. Before we go to the corn market in China, flip up the other chart about the wheat auction. Right.
There you go.
Again, for those people that are listening, I have a chart up on the board right now that shows the weekly wheat auctions that China has been holding really over the last 3 years. And it's got two things. It shows the weekly volume of wheat auctioned, but it also then shows the percentage of which was actually sold. And the right-hand side of that column, which covers basically the last 2 months in China, the percent of wheat actually sold that was offered has gone from about 5% to about 75%. And the volume of wheat offered has gone from 2 million tons a week to 3 million tons a week. And so therefore, it tells you that there's a lot of demand for wheat today that didn't exist 2 months ago.
That's an interesting statistic, because it's not something that you've heard really anybody in the trade discuss, to my knowledge.
Absolutely right, Joe, and that's one of the reasons I wanted to bring it up today, because just not enough people are paying attention to this. And again, I'm not going to call myself an expert to try to quantify it. All I'm saying is, just from a trader instinct, it will make a difference. I don't know to what degree it's going to make a difference, but it is making a difference. And by the way, the estimated volume of wheat in China's reserve is about 87 million tons. So, they do have some reserve stocks that they can be auctioning. And quite frankly, the fact that they've upped the volume of weekly auctions tells me that they're not shy about wanting to put more wheat into the marketplace. So,
well, and it's just another lesson in the fact that when you see a big move in the market, it has consequences. A market like the corn market can't rally forever without there being consequences, and this is one of the consequences, I suppose.
right.
Do you want me to pull up that corn price chart?
Yeah, let's do that now.
Okay, so we've got the where did I put it? Here we go. Dalian corn futures right here.
Now, this, of course, is in the local currency, Dalian futures. And frankly, I've seen the cash market pretty well track the Dalian futures market. And the way I think about this chart, and again, it's currently at a 4+ year high. And it's rallied off a 5-year, actually about a 6-year low in 2017. It's nearly doubled in value. Corn prices have nearly doubled in value in China in that 3-year period of time. But the way I think about this chart, if I had included a weekly chart of corn futures, it would also show a lot of resistance. You know, you go back over the last 5 years, there's been very few occasions where the nearby corn futures have traded consistently and sustained a rally above $4.20. And that's what, when I pulled up this chart of Dalian corn futures that actually goes back to 2011, it reminded me exactly of the nearby corn futures market at 420. There is a lot of resistance at the current Dalian futures market. Now, does that say it can't go higher? Well, not at all. It might go higher. But all my point is, it just reminds me of so much of how December corn has really struggled over the recent years to trade above 420 in the nearby market.
Yeah, and if it does it doesn't sustain it for a very long period of time at all. We were
we were last above it in that little weather scare of 2019.
Right.
The market that everybody in hindsight kicked themselves for not acting on.
Right.
You know, and again, over the last few days, I mean, we got to 420 a couple of times between Friday and Monday, and here we are today, 20 cents lower, 15 cents lower.
Why don't we talk about this this quota thing real quickly, because I think that it's something that people don't totally understand. And you have this slide here about the quotas. Let me see if I can get the whole thing on the screen. So this TRQ has something to do with the World Trade Organization, but the Chinese government also has some control over it. Can you just talk generally about that?
Well, yeah, the tariff rate quota, otherwise known as TRQ, it was actually part of the WTO agreement in 2001. It obligated China that if importers of grain, and it applies to corn, wheat, rice, and cotton, if importers wanted to apply for importing these commodities, they could do so. And it applies on a calendar year basis. They may apply, they may not be granted the quota, but if granted the quota, the import duties on those commodities is 1%. And so it's obviously over the years been an economic decision for the most part as to whether anybody applies for the quota. And the one important thing is, I always emphasize, the tariff rate quota is not origin specific. Any origin may apply. It's not U.S. specific. There is no origin specific. So if you receive a quota, you may purchase from whatever is the most economical source for that particular commodity. Now, the annual obligation, as we've discussed for corn, is the 7.2 million tons annually. that USDA is now using as their import estimate. There's been no official word whatsoever that China has granted special allocations as they have done in the past for cotton. But there have been media reports that they have granted 5 million tons additional to a state-owned trading company. Now, another part of, and this goes to your comment about China basically controls the process, another part of the WTO agreement specified the proportion of the TRQ that would be allocated to private enterprise and the proportion that would be maximum proportion that could be allocated to state-owned enterprises. And for corn, that has been a 40% allocation to privates maximum and 60% to state-owned enterprises. But overall, there has been absolutely no transparency whatsoever in the TRQ process from China's standpoint over the past 19 years by which it's been enforced. This certainly was an important point of discussion and negotiation during the phase one trade process. But as far as I can tell, there has been no, if you will, variation from past practices. It's still just as opaque as it seemed to ever be. And in fact, I would go on to say, I have credible sources, I'm going to say, that suggest to me that one state-owned trading company has been the sole activity in all the corn purchases, and that's the COPCO. COPCO is both acts as a private soy crusher and is also a state-owned enterprise. So there's a bit also of a conflict of interest there. And in fact, last Thursday or Friday, I forget which day it was, I think it was Friday, there was a Reuters report that was even referenced the 5 million tons of additional allocation that had been granted to COPCO. And what I found interesting in that is that according to their unnamed sources, COPCO has agreed that the maximum profit they can earn on whatever corn they sell into the domestic market is the equivalent of like $4.50 a ton, and any profits beyond that will have to be turned over to the state, to the government. So I found that report interesting. I don't know if it's credible, but it does more or less confirm what I had been told, and that is COPCO is the sole owner of nearly all the corn that has been purchased, which suggests to me that he also may have been the sole beneficiary of the entire allocation to date of the 7.2 million tons or whatever it's been. So that's kind of the inside baseball view of what's going on with the corn purchases.
With the WTO agreement, so China messes around with these quotas, and it's not very transparent. They can pretty much do whatever they want. Is there any consequence with the World Trade Organization when China messes around with these quotas or changes them? I mean, is there any ramification there?
Apparently not. I know that the USTR has made it a point of discussion, but as far as I can tell, there's never been any cases filed with the WTO that has really delved into this.
Well, and the U.S. would have no reason to complain. I mean, it's their trade deal, right?
Well, it's in terms of the phase one. Yeah, I guess that's true. Yeah, but I mean, it's if I were on USTR, the priority I would have made in regard to the TRQ is to amend these percentages that were allocated to private versus state-owned enterprise. I mean, going back to 2001, state-owned enterprise dominated China's agricultural trade. And so the environment is so much different today than it was in 2001, but that's just my opinion. That I think that was I don't know if that was discussed, but in my view, that it was a mistake if that was not a priority issue of changing those allocations. Anyway, that kind of gets off on a tangent, but
I think we've done a decent job of summarizing kind of what's happened to this point. I want to talk a little bit about what is possible or perhaps inevitable even as we move forward here. So we've got Brazil planting crops, big acres, record crops being projected at this point. Yet we're just starting the process of shipping out these soybeans and corn that have been sold. Are you good? There's a lot of questions here. I mean, do we see cancellations down the road? Do the purchases continue? Does a lot of it hinge on Brazil? I mean, what are your thoughts here in terms of continual purchases or how this is going to play out the next, say, 2 months?
Well, again, I'm going to preface this by saying this is just solely my opinion.
Well, that's what you're here for.
And I would not make any decision based on my opinion about this. However, I would say this. I've seen all these media reports saying that the state-owned trading companies are lobbying for increased quota, right? Well, look, if you were COPCO and you owned, let's say, 18 million tons of corn, and let's just say for the sake of discussion that you had an allocation of only 7 million or maybe 12 million, I'd be lobbying for more allocations too, right?
Right.
And so the penalty, if you import, if the government wants to stick solely to the rules, if you import grain and don't hold a quota for what you import, the penalty says it's 65% per ton. So I just want to throw that out there because I think the probability is low, Joe. I don't think the government is going to stiff COPCO on this. But I just want to put that thought out there is that you have to ask the question. It's so obvious there is more corn sold to a China entity than the allocation can meet. So why haven't they publicly increased the quota allocation? It would make political sense if China were to say, look, we'll double the imports of corn. That would be a lot better to me than simply kind of doing it under the table, right? I mean, you've got a phase one trade deal. You're trying to, keep up the best image that you can in the global markets. So why is there not in their best interest to simply announce publicly that, okay, yeah, we're going to double our quota, or we're going to triple our quota? I just asked the question, why has it not been done? If it's so obvious to everybody that it will need to be done, there's a reason why it hasn't been done. So again, what I'm trying to say is the ownership apparently is on. And if there's something going on behind the scenes that the government is trying to teach COPCO a lesson of going out here and purchasing all this corn without an allocation, then there is a risk there. I don't think the risk is high, but there is a risk there. And it is a known fact and written in the agreement that the penalty for importing outside the quota is 65% per ton.
So moving forward here, China typically, if this were, let's just say this was a regular year, no trade war, no trade deal, whatever. Mm-hmm. China would typically stop buying U.S. beans and start shifting purchases to South America sometime in November, December?
Well, first of all, there is a record amount of beans sold by the producer in Brazil for the 2021 crop.
It's more than half, right?
More than half at this point. I think it got to maybe 50 to 55% of the estimates. And of course, the weather and the late planting probably has halted, for the most part, additional sales. But 50% is the record sales at this point in time. Most of that risk from the producer to the Brazilian exports have been transferred either to domestic crushers or to global soybean importers, of which China is 60% of the market. So there is a huge book on already Brazil to China. And the last I saw it was in excess of 30 million tons of beans February forward. So I think the transition is going to occur, as it generally always occurs, in about February. And that's why you go back to this notion that China needs about 8 million tons a month to fill the gap in between September 1 and, let's say, February 1. And they're at, we know, about 25 million tons of beans on the books already from the U.S., and probably more if you throw in a few of the unknown sales. So the point of all this is we're going to continue to see sales to China tail off for beans. And frankly, it's probably going to tail off in corn because corn values, April forward, especially, well, more like May, June forward in Brazil, but April forward in Argentina, they're going to be very competitive for corn business to anywhere, China or anywhere else come their harvest. So that's what I would look for. And specific to beans, we're going to see a slowdown in sales of beans to China specifically.
Ken, where is China's appetite for beans coming from? I mean, they've imported basically a record amount from Brazil here this last year, I believe, or pretty close to it. And now they've got record U.S. sales on the books or purchases. And now you're looking at a record Brazilian crop. I mean, has the appetite improved by that much?
I think so. Certainly the recovery in the swine herd has gone faster than anybody expected it would. And keep in mind, they had ramped up the poultry production as well. And so I don't see much scaling back in the poultry production. So I think on balance, I think there may be a little bit of reserve building in soybeans going on, but on balance, I think it's pretty well fundamentally based in terms of their consumption.
So basically, I mean, the way I see it, the beans, we're kind of basically getting back to normal-ish in terms of where we were like pre-trade war. I mean, they're buying a whole bunch of beans from us just like they did before the trade war started. But this corn thing's different. I mean, the corn thing is different because you haven't seen this sort of stuff before, really.
Not at all. No, there's nothing in history that even gets you close to this kind of level of appetite for global corn. And so, again, you just have to, look at what the domestic market in the corn is telling you in China and say, yeah, it looks justified for sure.
So is this
Joe, you can import, if you have an allocation, you can import corn from almost any origin at $100 a ton under what the domestic market is trading. So There's a lot of play there.
Do you think when we go out, say to next year, say the next 5 years, I mean, is this something that we may see more frequently or on an annual basis, that China's a big buyer of U.S. corn on the export market, or is this a flash in the pan deal?
I don't think it's a flash in the pan. I think China's got a decision to make. First of all, they've had minimal improvement in technology. And the reason for that, in part, is they've had GMO corn and biotech corn in trials since I lived there 15, 20 years ago. And they've yet to commercialize any biotech traits in China for corn. So I think they've got a decision that they're facing, whether to commercialize biotech traits as a means of improving their yields in corn. That would be one thing that would be on my screen over the next 2 or 3 years. But I also say I would look for them in 2021 to make a huge effort to ramp up corn production in China and try to rebuild their reserves. I mean, sometimes it drives you crazy if you try to use Western logic on China. I mean, if you look at what has happened, they were very aggressive And even in this year, they were very aggressive in terms of liquidating whatever remaining corn reserves they had. And now they're turning right around and trying to recover it. Well, that sort of makes sense from an arbitrage standpoint. But if you were really that concerned about food security, it doesn't logically make sense that they would have even been willing to auction off their final corn reserves, right? So, sometimes you can drive yourself crazy if you try to use logic there. But
hey, Ken, thank you so much for coming on, and we'll do it again sometime.
I enjoyed it, Joe. In the words of Joe Madden, I hope I didn't suck.
No, I think this was good. I think that my listeners and viewers will really enjoy this. That's Ken Morrison from Morrison on the Markets. Thank you for listening. Thank you for watching, everybody. If you're listening on the or watching on the live stream, this will all be available on YouTube and on Facebook and on just about every podcast app out there. So certainly check it out. We'll catch you guys next time.